Welcome to the Rick Helps Real Estate Show. Once again, we try to make sense of this crazy Arizona real estate market. It's good to be back home. I spent the weekend in Las Vegas, went up and watched the Foreigner concert. It was fabulous. Half of you have probably never even heard of Foreigner. Funny story, we were sitting in a lounge yesterday at the Wynn with my friend and his wife, and the server comes up and she goes, "Late night, guys?" Because we must have been tired. And John, don't tell her. And he goes, "Well, for us." And she goes, "How late?" And he said, "Midnight." She just goes, "Tee." That's not late in Vegas. After 2 days, I'm ready to come home. So what's going on in the market here today? Well, let's take a look at what's happening in the mortgage business right now. Sean, I normally gamble $40 and I got it down to like $3. And then I got it back up to 52 and I punched the cash out button. So I used to manage Las Vegas when I was in the baking business. So I learned a long time ago to leave my money in my wallet. There's a reason those buildings are so big and opulent up there. But mortgage has not really changed that much today. It's pretty calm in the mortgage market, 6.57. That's kind of where we were the other day. And I can tell my mouse is going to do the screwy thing that it did the other day. But the real news of the day is what's going on with Open Door. Now, today they only have 273 listings left. Here's some key numbers that I wanted to share with everybody here. This is how much money they lost. And let me see if I can get this to get a little bit bigger here. There we go. In August, they lost 29,000 per home. This is just in our market. And in February, they lost 56,000 per home. But what's interesting now is they are kind of, we don't have the March numbers yet, but they've reduced their inventory so much that they're kind of out from underneath the number of homes that they have for sale. And what's happened is they already wrote down the value of those homes to the market value. So they may have paid $575 for the home. They overpaid for it. So they went ahead and wrote it down to $500,000. So they wrote it off. It's on the books, or it's off the books now. And so now they're in this market. I don't know what their numbers are like in Dallas because they did have a lot of inventory in Dallas. But in this market, they have the opportunity to be stable and maybe start entering back into purchasing more again. And the only reason we don't really focus on Open Door, but we talk about it because at one point they were a little over 10% of the home purchases that were going on in this market. I wouldn't say that they were responsible for driving up our prices because everybody was buying when they were buying. So, but they were sure making it hard for the average person to go out and get a listing in some markets when Open Doors coming in and offering them 30,000 more than they would have got anyway. And that's why they burned so bad. That's why their home prices, that's why they had to cut them so bad. So the era of going in and getting a bargain price from Open Door is now in the rearview mirror. So when they first started turning and you knew that their asking price was too high, you could get them down $80,000, $90,000. Now forget it. They've pulled their prices down. Do I prefer coffee or tea? Coffee. It's not that I need coffee, but if I have a cup, I'm less apt to hurt anybody. So our active listings here are still beginning to decline. Look at this, 12,838. This morning we have 13,000, but the way that I think the Cromford tracks a little bit differently than I do. I'm looking at my 7-day moving average here, and you can see that new listings climbed up a little bit, but the little tiny yellow line here is number of new contracts is now in the 3,300 range. New contracts, 3,318. It's going up. It's not going down. Very interesting in my world. Let's see. Bravo also says, wonder what you think of current news about oil Saudi price cuts. That's concerning for rising inflation. That's concerning for my big trip that's coming up. I did not want to read that. From what I understand, that there was the catalyst for the cuts was, I think we said that we were not going to stock the strategic oil reserves this year. So they said, fine, and we're going to cut production so we can raise prices. So it's a complicated business. It's not going to help inflation. I think you're right. It's going to be ugly. Um, Here's the prices. Average sales price still going up. What's interesting is when you look here, back in this little corner here, I'll show you a very little dinky circle with my red pen, up 1.9% for February. Now, you may remember earlier in the week, last week, I was saying everybody's going to be concentrating on the Case-Shiller numbers, which were down because they only went to January. It's going to be a while before they start paying attention to what's happening in February and March. Business is much better than it was in December and January. Just finally starting to trickle out in the news. I think one of the news stations actually had an article I saw on YouTube this weekend that said, have we turned the corner? So we've gone from pessimism to skepticism to hope. Unless you're a buyer, you're sitting back going, oh man, did I miss it? Because the other thing we've talked about is that you never know when you're at the bottom until you look back about 3 months and go, oh, so the opportunity was there. And so now as numbers start to turn around, some people are probably kicking themselves. Could it turn around again? Of course, it could always turn around. Bravo says that's like setting up for raising CPI next month. This month's CPI okay, but next month can go higher. Yeah, I don't know. A lot of the other, remember in some of the CPI numbers, I think they exclude food and energy. So that's what they say they look at, core data. Good morning. Sorry I'm late. I was watching your water video. Good stuff. Thanks, Jackie. Yeah, for those who don't know, if you look on my channel, I got an update on the water situation, and I'm actually sharing the water level in all of the lakes and reservoirs we have in Arizona, like 98% full. And we're just now starting the snow runoff. So it's very encouraging on the waterfront. Flew over Lake Mead on Friday. It's still pretty doggone low, but they're up about 8 feet. So it didn't look as dire as it used to. And my understanding is the Rocky Mountains have 138% of normal snow accumulation. So that stuff should start pouring down the Colorado River. But then we have to wait and see, well, how dry is the soil? Because we've been having problems where the snow melt just soaks into the ground, gets soaked up because it's so dry. So we'll see what happens. Bravo again here says, I'm buyer first time, but I'm waiting for more stability in CPI. I think it's best to buy when it's lower, maybe 3 to 4%. Timing's everything. We'll have to see what's going on. Good morning, Keenan. We should be getting some real good deflation numbers over the next 6 weeks. We will see what that looks like. I think there's a lot of data that's coming out, but everybody's holding their breath for May 10th, the next Fed meeting, and bets are saying, and the markets are saying that rates will come down. Could be in the mid fives. So the other thing that we got here is look at what's going on in Phoenix. And that is that Phoenix area saw the largest increase in U.S. population 2022. So people are like, well, how come real estate isn't going down? Well, people are moving here. The county's population increased by 1.3% from July 21 to July 22, with the addition of 56,831 new residents. Sean says, wow, if you didn't buy in December, you missed the boat. Well, time will tell, but December, there was not a whole lot of activity going on. Now, the Phoenix Metro home buyers here, the article says, signs of optimism. After enduring a nail-biting ride in 2022 caused by rising interest rates, builders and real estate agents are bullish again on the Valley's housing market. So we spoke the other day and said, not everybody's got the memo yet, especially some buyers. True on that article. My cousin moved to Phoenix from Michigan. Spoke just the other day about the fact that the buyers, if you're just kind of watching the news on TV or occasional newspaper article or maybe something on Reddit, you're seeing those numbers from December and January, and you're going, well, the market's pretty tough shape. So I'm not offering you your asking price. Many people that are out there looking at homes this weekend discovered that you probably need to offer the asking price because there's more people looking at the home besides you. Now, that's not to say don't try it. If you offer something below list price, don't let them reject the offer. Try to stay in the game and try to get your price. worked out for us last month, but we took 6 months to work on this one listing that was open doors. It literally took us 6 months to get them where we wanted to be. But sellers are, I think, starting to see the realization that they don't need to price too high, because our price, the listing prices of what sellers are putting out there have now leveled off. So they haven't kept increasing. They're still offering concessions, but buyers, I think it's going to take them another month to go, oh, I didn't know the market had turned around. Now we could have a bad April, but it sure doesn't look like it. Not if you look at the Crawford data and you look at the numbers today. And Jackie's saying 10 inquiries on coming soon in December. December wouldn't even have tried coming soon. You're absolutely right. We've got a listing coming up and we've listed it as coming soon. It's going to be available, I think, the end of the week. And people are already calling and asking questions about it. December, they would have just snoozed that one off. They would have just said, I don't want anything to do with that. And if we look at the Crawford Index, and it's a leading indicator. And, some people like it, some people don't. Historically, it's been pretty good. On the chart today, it's not telling us anything. So it didn't pull up. What we're seeing here is right in this corner, this is supply and demand. The red line is demand. The blue line is supply. And they're going this way instead of this way. That means you're going to have pricing pressure on the upward side, like you did here. Back before the big debacle, you had supply way up here, you had demand down here, and the wheels fell off the wagon. So that's where we were back then. Bravo, curious what you think of more expensive homes. They're slowing down a little bit. We're seeing that in the Crawford Index, and as far as which cities are doing the best, I think, if I see if I can find it here, we had an update on Friday. Let's see, where is it? Here we are. Apologize for the delay here, folks. So take a look at Paradise Valley here. Their index is only 111. So, and it's going the opposite way. So down 13% in the index from the month prior. That's a direct reflection of the stock market. That's what's going on. And Cato says, I used to like it. Sean says, when do you say there might be a rate decrease? Well, I'm kind of leaning on Pat for that. And they, based on what they're seeing in Mortgage News Daily and Barry Habib, they're saying May. And he's really hanging his hat on May 10th. Now, you remember, he pulled the trigger and said that November 10th, we were going to see a huge drop. And he was right on the money. November 10th, we had one of the largest swings that we've had in years on the downward side for rates. And then it creeped back up towards 7 again. But it was very, very interesting. He's won several, I think what they call crystal ball awards for being accurate. And he's calling May 10th and saying that it's going to be here. I finally found my chart. Gosh, this took me a while. It wasn't populating. See that little magenta color down here? It's going up. It's not going down. That's the market index. You can see that last year, 2022, see how it started to decline? Way back in March and April. Prices really started tanking in May, but the signs were out there as early as February that things were going in the opposite direction. So it's a leading indicator. So you can take a look here. Back in 2020, stay home right there, right? Then it started going up, and it started going up at a pretty good clip. And a lot of people weren't seeing that perhaps in the middle of this pandemic that real estate prices were going to go up. The chart was telling you indeed that that was going to happen. So it's not the holy grail of all indicators. It's fairly accurate, and you can hang your hat on it for a few months. Not seeing significant rate decrease, but rather rate stability at high 5s to 6. I mean, inflation may remain high with this Saudi news. Yeah, I think you can. Right now, we're sitting at 6.57. I don't think it's unrealistic to get down to 5.75 by late spring. So, and I think that's enough to keep housing alive. I do not want to see it heat up again. I really don't. I don't want to see us get out and do bidding wars again. I think sellers have no problem moving their house right now. Even when you have a listing, it's not fun to go through 6 offers and then try to go through and say, okay, give me your highest and best. I hate that. You're flying blind. But you end up, talking to 6 different agents and going, okay, and if you have permission from the seller to disclose the offer prices, then you can be very transparent, but you need permission from the seller. Jackie, you're saying if we get 5.75 and no inventory, we're in trouble. Absolutely. That you couldn't be more right, because if we look at where our active listings are right now, that's not a good sign. But will people leave their 3% mortgage to get a 5.75 mortgage? Probably not. But we're almost down to, I think this is 2020. Yeah, we're almost down to 2020 levels. And of course, you can see how the chart went down. We had the pandemic and everybody just said, well, I can't list my house. I don't want people walking through it. So they took their homes off the market. And we're almost approaching that level. Remember, at the peak, on average, we have 27,000 listings on average. That's before all these people moved here. So if we had on average 27,000, it's probably safe to say that a balanced market has about 30,000 active homes. So when you're sitting down here at 12, if you're a seller and you're kind of sitting around thinking if it's a good time to sell, there's your sign right there. It's pretty obvious. You've got interest rates stable. You have sales prices going up. You have inventory going down. Seller's market, especially in Chandler Gilbert. On the high end, they don't concentrate on interest rates. Most of those people are cash, believe it or not. They don't finance a $2 million home. They just pay cash out of their earnings from the stock market. So Sean here says the Fed established rates for the whole U.S. and hotter markets like Arizona. Is that a problem? Let me digest that question just a minute. So you're saying, let me look at this. If the Fed establishes rate for the whole U.S., well, the Fed establishes the overnight rate, Sean, but it's the bond market that really sets what mortgage rates will be nationally. All depends on supply and demand on bonds. If bonds are selling like crazy, flight to safety out of the stock market into bonds, rates go down. If it looks like we're not going to have any kind of a recession with any impact, then rates will go up, because good news equals bad news when it comes to mortgage rates. If it looks like the recession is going to get ugly, and if it looks like unemployment's going to go higher, then rates come down. Well, the challenge that we have right now, Sean, is that the central bank raised rates so fast that now these banks are in trouble. So they can't clamp down much longer. If you take a look at how much the banks are borrowing from the Fed right now, it almost looks like quantitative easing all over again. It's not. They're just borrowing short term from the Fed to keep themselves from getting in trouble. But it's very alarming. It's a huge number. So if this continues, they're just kind of putting lipstick on a pig and Band-Aids on the banking system. And we could end up with lower rates just to keep things from collapsing. Arizona has got lower inventory for sure, but the rest of the country is in the same shape. People are just not listing. Ask people in Seattle; they're saying the same thing. We're not getting an increase in the amount of new listings coming on because people are very comfortable. Baby boomers are starting to sell to move to be closer to their kids, but they're kind of rethinking that because I'm going to move closer to them. Do I really want a 6.5% mortgage? So there's a lot of thinking going on right now as far as moving. So it's going to be a fun few months here. April looks good. If you're selling, April is definitely good. We thought maybe that it probably would be better in May, and it might. Looks like it's probably going to be pretty good in May. But there's no doubt now in my mind, if you're selling, that April's very, very good. And if you're going out there as a buyer, you don't have to waive inspections. You don't have to buy as is. You can be very comfortable with your offer. So there's a little bit of calmness going on right now that's kind of refreshing. So we'll continue to watch that right here. And if you get a chance, jump in and watch that water video that I have, and take a look at what's going on with our lakes here. So have a great Monday. Take on the day and enjoy the rest of the week. Take care.